Well, thanks, Dave. It's a pleasure to be here, and good afternoon, everyone. Thank you for your time. I'm Tom Bemiller. I'm a founding employee with Avalara back in 2004 when we first started the company. And in that time, I've done a number of different roles for the company that I filled. Initially in sales, and then API sales, or highly technical kind of programming um, types that we were selling to at the time. I've worked in customer loyalty, and now as a strategic alliance manager, my role is to work with some of the best partners that we have, like Clients First. I cover a geography, pretty much New England and mid-Atlantic area, live outside Philadelphia, and I'm just real excited to be here and thankful for the opportunity. Today, we're going to talk about the risks that a company takes with sales tax and why it's so difficult to get sales tax absolutely accurate. Now, there's a lot of different issues that we're going to talk about, but it sounds pretty easy to say that really what you need to do is get the calculation correct. Now, there's a lot that goes into that. Um, and these are the things we're going to be talking about. But first, you're going to need to pick the correct jurisdiction. You'll need to know the rates and the rules for each product or service in each jurisdiction. You'll need to know if the customer is tax exempt or not, and then be able to prove it. And then at the end of the period, you're going to have to aggregate all your sales and purchase information to process, create, and submit the returns on time. Now, if you're doing business internationally, you're selling cross borders, it gets even more complex because there you start to deal with value added tax, excise fees, import duties, landed costs, a lot of extra items. I think today I'm going to focus on the domestic issues because that's where most of us are doing business at this point. Now, we worked with the Wakefield Group a little while ago, and they reported back that 52% of accounting and technical professionals agree that completing a marathon would be easier to accomplish than understanding sales tax compliance laws. Now, I run into some pretty significant misinformation that actually keeps businesses from being truly compliant. Many companies will tell me they don't need to worry about sales tax because they're too small, or they only sell online, or the products are tax exempt. Some companies are telling me they're doing it internally just fine. But here are some stats from that Wakefield Group study that say otherwise. Now, on top of these, over half of the tax professionals surveyed had missing or inaccurate documents, or they just couldn't produce the correct documentation that was requested by a state auditor. They said further that the average time it takes for a company to update their sales tax compliance process is about 6 months. So what you have is almost half of the companies haven't looked at their processes recently. Most expect that they'd have to pay penalties and fines in an audit, and it's going to take them 6 months or longer to get it right. And during that time, the inaccuracies continue, so the costs only get higher. So the average small or mid-sized business that was surveyed in this incurs cost of about $65,000 if they get called into a sales tax audit. So, and that's why it's important. So let's talk first about the risk of getting it wrong. So there's two sides to the coin, and we know what sales tax is. That's where you pay a tax when you buy something. But when your company purchases from a company and they don't charge you the sales tax, then you incur the liability of use tax. That would be the other side of the transactional tax coin. And there's two risks there. I mean, if you're when you're buying products, you can overpay taxes in areas where the suppliers could have used your exemption certificate, or you can underpay taxes where they didn't charge you the correct amount. Now, that's the area that the auditors are kind of focused on most recently, because it's up to you to assess tax on sales as well as purchases. And when you sell to your customers, you pretty much have the same two risks. You can undercharge them, but you're still going to be responsible to remit the correct amount. So that's only going to decrease your net profit. Or you can overcharge your customers by mistake. And in that case, You're going to run the risk of creating negative customer satisfaction, and you still have to remit to the state the full amount that you've collected. So there's a whole industry that's sprung up to help with reverse audits, but we think automation is more efficient and less expensive. And what makes it real important is that the states are relying on sales tax revenue. Now, many of the states have been operating in the red for years, and they're getting more aggressive now, writing Nexus laws and exemption laws and auditing procedures to try and collect as much as they possibly can. And the pie is huge. 47% of all state revenue comes from sales and use taxes. So last year alone, there was over almost $24 billion in uncollected sales and use taxes across all the states. California alone was north of $4 billion, and New York was just under $2 billion that they didn't collect. So clearly there's not enough revenue in this one bucket to balance the books, but it does go a long step forward towards making that happen. So it's important to the states, and they don't want to miss any of that revenue. Now, if you're not using an automated service like ours, I can probably guess at what you're doing. First, you have to create a customer record, and then you're going to assign a tax jurisdiction to that record. Well, so that means that you're maintaining a table of tax rates somewhere else in your system. You're combining the appropriate rates into a schedule and then assigning the schedule to the customer. And when things go out of date, that whole process is prone to human error, and the data gets out of date relatively reasonably quickly. But then in inventory, you're doing the same thing. You've got tax-exempt rules or rates for each of the specific items in specific jurisdictions. It's time-consuming, it's research-bound, and it's going to go out of date on you. Now, if you're running an e-commerce business also, you've got a website that you're selling products from, you're probably relying on the storefront to assign the taxes. That's generally going to be based on zip codes, and we found that zip code tables really are only going to be accurate about 70% of the time. We'll talk about that in a couple of minutes, but Avalara, the AvaTax service, takes all of that off of your desk. You're going to have one tax code. It's called AvaTax, and we handle the rest. So after you get it set up, you never have to worry again about jurisdictional boundaries, rate changes, or legislative changes to the rules. Now, our customers need to be compliant and ready, but really all they want to do is grow their business. With that growth comes greater complexity and more and bigger compliance challenges. You know, as your company grows, your systems are going to become more complex. You're going to have more rates and rules and changes that you have to track. Your tax preparation processes get larger because you've got more states and jurisdictions to do returns in. According to that Wakefield study that I quoted a few minutes ago, the average small business spends about $63,000 annually on manual processes. That's on top of the $65,000 in audit costs that we discussed. All you really want to do is achieve compliance. You want to cut costs. You want to increase efficiency and find ways to grow the business. Now, when we're talking about sales tax, what most people focus on is the rate. But there's really a lot more that goes into it. Rates are just the tip of the iceberg. We're going to take a moment and talk about all of these items, but you need to know things like, where's my customer located? You know, is the product or service taxable there? Is there an exemption certificate that I need to have? So there's a lot that we're going to be drilling into. So let's start with the first question, which really is, where do you have the obligation to collect tax in the first place? Well, that's called Nexus. That's a concept that says that a state, any state, under their laws, can declare that you have enough of a business presence within their state so they can force you to become a tax collector for them. Now, the complexity is that each state has its own rules for establishing Nexus, and those rules now go well beyond the more traditional test of physical presence. Tightening these rules for Nexus obligations is a major trend that the states are using to address their loss of tax revenue. They're generally going to look at facility location, sales and service people in the state, your product, whether it's rented or leased, and activities in the states like sales visits, trainings, trade shows. They're also going to consider inventory that's located in the state as well as affiliate sellers. See, most states now argue that companies who are able to generate revenue without a physical presence or physical connection in the state still enjoy the benefits and protections offered by that state to other businesses. And therefore, they should be required to support these benefits through the collection and remittance of sales tax. And the laws are regularly changing. This happened just last June. The physical presence test that had historically been what we all looked at essentially was overturned. Let's talk about that a little bit. It was the South Dakota versus Wayfair case in the Supreme Court. I'm going to try not to get too wonky, but a little bit of history is going to be important. It was about 2 years ago that the lower courts in South Dakota ruled that their state's newly crafted economic nexus legislation was unconstitutional. But then in the fall of that year, September of 2017, the Supreme Court of South Dakota struck down that decision. So the Supreme Court in South Dakota said it is constitutional to impose a tax collection obligation on out-of-state sellers. Now, the U.S. Supreme Court agreed to take up the case a little over a year ago, and last June, they ruled in favor of the state of South Dakota. So basically, what SCOTUS did was flip the decision back to the state courts. And by doing that, since the South Dakota Supreme Court had already determined that it was nexable, the SCOTUS effectively overturned that long-standing physical presence rule, which dates back to the 1992 Quill Corp versus North Dakota case. So question is, what does all of that mean? Well, what it means is that now South Dakota, and in fact all the states, have the authority to impose a sales tax obligation on out-of-state transactions using economic nexus as the basis. Now, we know historically that states have come up with all sorts of different rules to trigger nexus. There was affiliate nexus, there was click-through nexus, they even created a cookie nexus. Economic nexus is just a new way for states to impose that tax collection obligation on you, the seller. It's going to be based on revenue and or your sales activity within the state. So the economic nexus concept argues that by hitting some threshold in revenue within the state, or by producing some specific number of sales over some specific given period within that state, you've created nexus. Give you an example how goofy it can be. The Nebraska legislature introduced a bill that required sellers with sales of only $25,000, it's not a lot of revenue, or 200 transactions to begin collection. Now they left an out in that legislation that said if the seller refused to collect the sales tax, it was okay, but you needed to notify the Nebraska purchasers that sales and use tax is probably due, needed to send a notification to them by January 31st showing the total amount that they paid you, and you needed to file a statement by March 1st with the state's Department of Revenue. Now, unlike physical presence, this is based entirely on sales revenue, transaction volume, or a combination of both. So right now there's probably about 33, maybe 35 states with the District of Columbia who currently have these rules on their books. And as you'd expect, as with all things sales tax related, economic nexus criteria vary by state. So some states are going to look at sales last year, some are going to look at sales in the previous 4 quarters, and some are going to look at sales over a rolling 12-month period. The thresholds also vary by state. So, you know, some states want $100,000 in revenue, others are going to start at $200,000 in revenue. Although all of this aimed to level the playing field between non-collecting out-of-state sellers and in-state brick and mortar businesses, it really becomes another layer of complexity that you need to deal with. Now, South Dakota was the first state to get permission from the courts, but many other states are following their lead with similar economic nexus rules. Here's a visual overview of states that have various nexus laws in place. This was as of April 10th, just a couple of weeks ago. And the states in blue have already adopted those rules. You can see on the side block that Vermont, Kentucky, and Hawaii had laws that took effect on July 1st of this past year, last summer. That was less than 10 days after the Supreme Court ruling was made. We had 4 more states come on board at the beginning of January, and we expect most, if not all, will pass legislation this year allowing them to impose the collection obligation on you. So California began collecting in April. Vermont, Pennsylvania are scheduled to come on board in July, and Texas currently expects to come on board in October. Now, New York is an interesting example. New York has already established this obligation, but they haven't set a date. They said, we'll let you know sometime this year when this is going to go into effect. Now, all of this information is available on our website. You can get all this information by going to the Department of Revenue websites for each of the 50 states and reading through their rules and regulations. But if you go to avalara.com and choose resources and then scroll down to South Dakota versus Wayfair, this map is going to appear along with a lot of other information. So you'll get, law citations, you'll get dates, you'll get things that have already happened, things that we expect to happen. This page could potentially save you a ton of research time. So all that said, you're probably wondering, what should I do? Well, you're going to need to understand these changing tax obligations. You're going to want to reassess your Nexus footprint and get registered where necessary. So if you have a trusted state and local tax CPA or an attorney, tax attorney that can counsel you, that'd be a great starting point. If you don't, we have an extensive directory of experts you can contact, or you can even use our tax advisory services team to determine where you have Nexus or maybe to work on some other related issues. But let's get back to the key challenges that we talked about a moment ago. Nexus is not the only concern. Understanding which tax jurisdiction a specific address belongs in can be a significant challenge. In the United States, you've got over 150 million addresses, and they all fall into multiple jurisdictions well, most of them do, but there's 16,000 tax jurisdictions in this country. You've got thousands of rates, exemptions, and changes. Last year alone, we changed over 6,000 records in our sales tax database. But the jurisdictions tend to overlap. So let's take a look at an example of parts of 3 counties around Denver, showing just 7 zip codes. So you can see here how the different jurisdictions are geographically positioned in different parts of those zip codes with various different tax rates. And in just one zip code, you'll see 6 different jurisdictions with 9 different tax rates that need to be applied. The reason I mention this is many companies, well, in fact, probably all of our customers before they came on board with Avalara, used zip codes as the primary basis to determine what the tax rate is within an area. You can see here that that's clearly not uniquely going to define the jurisdiction, so it's only going to lead to sales tax errors. In order to get the correct tax rate, you really need to use the full mailing address to pinpoint the correct jurisdiction within the zip code. So you figured out where you've got Nexus. You've identified all the jurisdictions your customers are in, but different product categories fall under different rules. And several thousand different types of rules that are out there, it's almost impossible to keep track of them all. And those taxability laws are changing. So it's essential that the sellers know what's taxable in each jurisdiction to prevent exposure and liability they come under audit. Product taxability laws also are not consistent across state lines. So what can be taxable in one state could be exempt in another. And you need to know what's not taxable in order to avoid overcharging your customers. So we always recommend a taxability review on your products and services, especially if you've added new ones or you've moved into new markets. Here's just a couple examples of some similar products that are taxed differently. I like that one in Indiana. Can you tell me why Nestle's Crunch Bars are taxable in Indiana, but Kit Kat and Twix are not? I'm sure somebody out there knows the answer, but for the rest of us, Kit Kat and Twix contain flour. And in the state of Indiana, anything that contains flour is considered food. Thus, it's exempt, where Nestle's Crunch has no flour, so it's taxable candy. It's crazy. And every industry has these kinds of goofy rules. There's a number of real complex industries that have a lot of rules that you have to deal with. So like if you're selling software or hardware or digital goods, you're going to have a lot of rules that you have to understand. If you're selling billing for services, or you're selling medical devices or equipment, food or beverage, clothing, or school products or dietary supplements, you probably have more taxability rules just to make things more complex than they could ever should be. So in that case, you need to understand all of these rules for all of these products in all of the jurisdiction. And then on top of that, some of your customers are going to come back and tell you they're tax exempt. Well, this is a problem because now it's not about proving that you charge them the right amount. It's about proving to an auditor why you didn't collect tax. And there's a number of issues here. First, tax exempt certificates really are difficult for salespeople to get, and it only adds stickiness to the sales process. I know some of the most exciting days in my career is when I was able to bring back a signed contract to the company, ready to go, deliver it to accounting, and everybody's all excited and ready to produce for our new customer. And then the following day, somebody from accounting would show up by my desk and say, "We can't accept this. We don't have a tax exempt certificate." So I needed to jump in the car, run back out to the customer, find a person in accounts payable who could locate the certificate, run a copy for me, and then I could bring it back. But you know what? Nobody ever told me what it was that made these certificates valid. So I never knew if I was bringing back the right form, or if it was completely filled out, or if it would even be accepted or not. Rifling through some of our customers' tax exempt files, you'd be amazed what you found. In one case, I found a copy of a driver's license that somebody accepted as a tax exempt certificate. That's clearly not going to fly in an audit. One single missing certificate easily can cost you much more than the taxes that you didn't collect. So then, after you understand your nexus, you've located the jurisdiction, know their rates, you've identified all the product taxability rules, you've marked some customers tax exempt, you've figured out the tax. Now you can look forward to sitting down in the middle of every month, or sometimes towards the end of the quarter, to do the tax returns. To do that right, you're going to deal with a number of things. First, you need to know, what states are due, when the due date is, how do they want you to file? Should it be e-file, or do you have to fill out a form on their website or send paper? And then the most complex part is you probably sell through multiple systems. So you've got an ERP system with an order entry. You might have point of sale. You might have 3 or 4 different web stores that you're working with, and maybe there's an affiliate or a sister company that you combine numbers with, and they may be on a different ERP. So in order to do this process right, you need to pull all the sales and all the purchase information from all of the different sources, put them together on one form, and then get it out. You're spending too much time on preparation and filing versus higher valued project. preparation and filing is not a revenue generating activity. It doesn't improve your sales competitiveness, and really all it does is it takes time away from other strategic processes that you should be doing and working on, different projects. So there's a better way. So what would you look for in an automated system? Well, the Avalara Sales Tax Suite is a cloud-based end-to-end compliance solutions. Now, there are some competitors that we have that have server-based systems, so you're going to install their software on your server, but there's a lot of maintenance and update ramifications you need to consider with those. A system in the cloud, you don't have any of those worries. And by outsourcing the sales and use tax process, you're going to achieve compliance, you'll cut costs, you'll increase efficiencies, and you'll be able to focus on more strategic initiatives important to your business. So AvaTax sits in the cloud between the order entry module, the web store, the billing systems, and the government, and in less than a third of a second, your systems are going to have an accurate calculation for hundreds of thousands of products across all 16,000 jurisdictions, taking into account the tax status of the buyer. Now, if you're using CertCapture, we're able to manage the tax-exempt certificates for you. There is a rudimentary exemption module built into AvaTax that you could use, but the higher end, more robust service can reach out to your customer, request a certificate be sent in. The customer logs onto your website, answers 6 or 8 questions, and we produce the certificate on their screen so they can review it, sign it with a mouse, and then it automatically goes into the cloud where it's available for you. And then at month end, you're going to want a company that can prepare and submit the tax returns, as well as provide treasury services to ensure that they're submitted, paid accurately, and on time. This is opposed to a signature ready system where you still need to print the forms, you need to produce the check rec, stuff the envelopes, fill out the forms, and then track everything. So the questions are, why would you want to consider a tax service? Well, the bottom line is it's going to save you money. You're going to reduce your risk. You know, I was kind of surprised about a year ago. I had heard that almost 3 times as many businesses get audited annually for sales tax than the IRS audits for income tax. And you're going to have less aggravation. I mean, let's face it, nobody really wants to do that job. Most of the tax accountants that I talk to daily readily tell me that the only reason that they're sitting at that desk is so that they can be promoted into another job in the company or go find a company and do a different job for them. So you're training people to do a job that's not their career aspirations, knowing they're going to go away, so you're only going to have to train their replacement. It doesn't make sense. A little bit about us before we wrap up. Company's 15 years old. We probably bring on more new customers every month than all of our competitors combined. We've got significant experience in all of sales taxes. This year we'll do over 8 billion transactions, and we'll submit over $30 billion in taxes for our customers. The important stat here is, I think, towards the bottom of that slide, we were the first company to introduce an accuracy guarantee on our calculations. There's one other company I know of that still offers that guarantee, but I don't see how they can guarantee that because they don't have the product content built in that we do. And AvaTax is always up. We never have to take it down for maintenance or updates. It's going to be up for you all the time. So manual sales tax management is time consuming, it's expensive, you're going to spend a lot of time and money, and still you believe the auditors are going to find errors. So you're spending money but not reducing risk. It's a compulsory activity, doesn't put 10 cents on your bottom line or drive any growth. It's a mandated activity and you have to do it. And you're already spending thousands of dollars annually just trying to be compliant. What you want to do is what you do best. Don't waste your time by manually doing mandated tax processes. So with that, let me bring Dave back on the line, see if there are any questions we can address or anything maybe came through the chat.
Yeah, thank you, Tom. Appreciate that.
Sure.
So with that, we'll go ahead and open the Q&A and the chat. If there's any questions anyone had, now's the time. Feel free to enter them in. Tom, looks like you might have answered all the questions already.
I love it when that happens. Then let me advance and just kind of point out that the items that you should be thinking about is, what's the impact on my business? What do I need to do? And when do I need to get it done by? And the first step really is to have a conversation. Touch base with the folks at Clients First. They're great partners of us. They're able to take a look at your situation, and they'll bring us in if necessary. And we'd love to sit down and talk with you and, see if there are some services that we can offer that can help make you more compliant for less money than you're already spending, so that you can go ahead and grow the business the way you want it to initially. With that, let me thank everybody for your time. I've enjoyed being here. If there's anything that I can do to help out, please let me know. And otherwise, I'll look forward to working with everyone at some point.